Tesla shares are on the verge of a real bear market. Oh, but wait, so you mean this isn't a bear market yet? Are you out of your mind? Well, allow me to explain the technical reasons why I, in my humble opinion, don't see a real bear market yet, but I admit that the situation is extremely dangerous and this is the last chance for Tesla stock to react and avoid an even more intense downturn. So let's take a look at what's going on here. Welcome to the Finance Hydra channel. My name is Nathan. It is a pleasure to see you guys over here. And when I say that we are not in a bear market, I'm not saying that we are not bearish, because Tesla has been bullish, Tesla has been bearish a lot in the past few years, but we are not necessarily in a bear market right now for a few reasons. If we take a look at the moving averages over here, we don't see a death cross yet. Tesla is still trading below the 50 and the 200 period moving averages, but they are not crossing yet, so we don't see a death cross yet. So Tesla could easily bounce again, especially right now that is extremely oversold. Its RSI is at an extremely low level. The last time we see the RSI at such low level was in December 2022, right before Tesla exploded more than 100% in one single bullish leg. So yes, we are clearly oversold, trading outside the Bollinger Bands over here, but we don't see a death cross yet. Second, if we take a look at a bigger time frame like the monthly chart, 1 month chart, we see this. What is this? Guys, since 2020, Tesla has been moving sideways. If we look at the big picture over here, the monthly chart, we see nothing but a sideways congestion, a huge long-term congestion over here. We are at the same price level Tesla was in November 2020. So we are not necessarily bearish in a crystal clear bear market. We are in a crystal clear congestion for years and years. This is terrible. This is horrible for Tesla stock. This is great for swing traders, because as swing traders we can take advantage of its swings over here and outperform Tesla's own performance, while a long-term investor is not. Maybe a long-term investor is not necessarily losing money over here, but it is losing the opportunity of making money on other stocks like Nvidia, for instance, which is crazy right now at this moment. So for long-term investors, Tesla is not looking very good, but for swing traders, it is looking extremely well. And if we take a look at the daily chart over here, we see that we are going down. We are losing many important mid-term support levels, but as I told you guys, we are oversold. I'm not saying it is a buy right now because there is no technical reason, there is no technical evidence at this moment suggesting a possible bounce on Tesla stock, but if we see a bottom signal triggered over here, I do believe Tesla has plenty of upside potential. It could easily explode to the 21 EMA on the daily chart, meaning we could go up roughly 20-15%, and this is not gonna necessarily change the bearish midterm sentiment, but it would be a very good opportunity for us to buy Tesla near a bottom signal, below support levels, around an oversold territory, when the risk reward ratio is looking very good. Because this is, guys, it is all about risk reward ratio. It is not necessarily about being right, because nobody has 100% accuracy in this market. It is about a good risk reward ratio, trading with a good trading plan, with a good trading methodology. And this is the big secret of a consistent swing trader. You make a big profit when you are right, and when you lose, you're gonna lose a trivial amount of money when you get it wrong. So again, it's all about risk reward ratio. So when I see Tesla oversold, when I see Tesla at a such critical situation, I do believe that this is a very good opportunity to buy if we see the right movement, if we see Tesla triggering a bottom signal. Right now, I don't see any crystal clear bottom signal, but we could see a bottom signal right here if Tesla reacts properly, if the broad market helps us over here, because SPY, it is still clearly bullish. We don't see any top signal. There is no top signal triggered. SPY is looking very good. Today SPY made a new record high. QQQ is also doing very well. I know we are correcting today. We lost yesterday's low, but this means that even if QQQ triggers a pullback, remember, we are in a bull trend. We are making higher highs, higher lows. So any pullback to the 21 EMA on the daily chart, or maybe even to the $412, would be just another buying opportunity. So right now, the market is still clearly bullish. Next week, we're gonna see, next week is earnings season, right? Because Apple, Microsoft, Google, Amazon, Meta, they're all gonna report earnings as well. So next week we're gonna see a very, very high volatility on the broad market. Many stocks are going to explode. Some of them are going to crash, just like Tesla. So if we see a good volatility, if we see a good bottom signal, considering that Tesla is detached from the broad market, we could see Tesla bouncing. We could see the volatility increasing even more. And if Tesla bounces to a higher level, great. That's going to be just phenomenal. Again, this is not going to be enough to change the midterm trend, but we can take advantage of such movement because, again, the risk-reward ratio is very good. It doesn't matter what I think. It doesn't matter what you think about Tesla. If it is going to crash, if it is going to bounce, it doesn't matter. All that we should do is to react properly to what the charts are telling us to do. Our personal opinions should not matter in this scenario. Sometimes I trade against my own personal convictions. For instance, let me give you guys a quick example over here. Coinbase. Last month, I gave you guys a trade on Coinbase because it did trigger a crystal clear bearish pivot point on the daily chart. It has been crashing sharply, giving us roughly 15% profits right here, but the market was very bullish. So I'm gonna confess to you guys, I did think twice before I give you guys this recommendation, but in the end, I did because it doesn't matter my personal opinion. What truly matters is chart patterns, candlestick patterns, risk-reward ratio, good risk management. These things are part of our good strategy. When we lose little. Every time we make money, we extend our profits as much as we can, as much as possible. And this is what we do on a consistent basis. For instance, last month, I also gave you guys a very good trading recommendation on Fortnite over here, the breakout of this bullish pivot point. What a simple strategy. The stop loss was below this key point, and right now it is just exploding. It is giving us 2.67 times the original risk. So see, trades like this you will find on our Telegram channel, which QR code is right here on the left corner of your screen. Super microcomputer. I gave you guys this trading recommendation right here. December 8th was triggered on December 12th. The stop loss was here below the support level, and right now it is going up 70%. The original stop loss was off 8% roughly. Right now it is going up more than 70%. That's the kind of trade we always do. We are not right all the time, but the big secret is to always make more money than you lose. This is strategy. So when I tell you guys, in my humble opinion, Tesla would be a very good buy if we trigger a bottom signal, that's the reason, because the risk-reward ratio is very good right now, especially because when we look at the weekly chart, we are very close to the bottom line of this descending channel, which is another very important technical support level. Tesla has been crashing in one single bearish leg, looking oversold, approaching a very important support level. If Tesla is about to react, now is the best time ever. However, what if Tesla loses this descending channel downwards? Well, then I do believe we are gonna trigger a death cross pattern over here. The 50-period moving average is going to lose the 200-period moving average, crossing it downwards, and we could trigger a bearish pivot point on the weekly chart, meaning Tesla could easily seek lower levels. The technical target of this bearish pivot point, let's use Fibonacci to set targets over here. First target, $142. Although I believe the 150s are going to act as a support level for us, the technical target of this, the first technical target of this bearish pivot point is 140s. The second target is $110, very close to the $100 over here. All right, so this is another very important support level. The last target of this bearish pivot point is below 100, is way below 100, is $61. I have seen some people saying Tesla at $60. Maybe they are using Fibonacci, maybe not. I don't know if they are saying this number out of their head, but it is the last technical target of this macro bearish pivot point, as we can see here on the weekly chart. So let's see, it all depends on how Tesla is going to react right here around this support level. Next week is going to be decisive. This could be an exhaustion bar. I do agree, this could be an exhaustion bar. So, but guys, there is no confirmation yet. We gotta wait for confirmation. This is why I'm gonna be here every single day in this channel to keep you guys updated on this. So consider subscribing, click the like button to support me. I highly appreciate your support, my dear friends. Join our Telegram channel right now for more trading strategies, for more trading ideas. Do not be a hostage of a losing investment, my dear friend. Join our Telegram channel right now. Thank you very much for your audience. See you guys next week. Stay safe. Bye bye.